Let's turn to the global economy. Europe bracing for the possibility of interest rate cuts later this week. Big meeting on Thursday. Let's bring in the former head of the European Central Bank. He was the president there, Bank of France honorary governor Jean-Claude Trichet. It's great to have you. I can't think of a better guest this week to talk to. So do you think they'll pull the trigger and cut rates?
Well, we will see, of course, but my intuition is that they will pull the trigger and decrease rates by 0.25%, even if there has been some bad news that were more or less unexpected as regards the goal, which is to stabilize prices and having inflation going down. So the bad news, there are four bad news, if I may. One, headline inflation at 2.6%, 0.2% more than the previous month. Core inflation 2.9, equally 0.2% inflation more than the previous month. The negotiated wages are picking up in the first quarter of this year, and services inflation are also picking up quite strongly. And of course, it calls probably for the new quarterly forecast projections, which will be displayed next Thursday, to be also more or less with some bad news. Of course, you have also good news, which are more or less the symmetric of the bad news. Unemployment decreased to 6.4% in April, which is the lowest level ever observed. And also the PMI indicates that the recovery is now going on in the euro area. So we avoided recession. We have recovery going on. Not surprisingly, we have more inflation than was suspected. But still, I take it that it is extremely likely that they will decrease rates. Yes.
And the other rethink that's going on right now is just how many rate cuts they will be able to achieve this year, given what you say is the bad news of stickier inflation. So what's your best guess at this point? Do you think they'll, after this week, how many more will we get before the end of the year?
Yeah, first of all, we must, of course, accept that data could be different from month to month, quarter to quarter. So we have to remain very cautious and prudent. If I take my best guess, taking into account all the information we have today, instead of thinking that it was likely that they would decrease rates twice again after the June decrease before the end of the year, I think it's more reasonable to think of one decrease of rates. But again, this is, my central intuition. It can change. We could have a lot of better news as regards inflation, and we could also have even more bad news. So again, I think it's very reasonable to the ECB as well as to the Fed to be data, I would say, observing and data dependent to see exactly what they do, because the goal is very clearly to be around 2% during 25. That's the goal. So again, it's easier for the European than for the Fed to be at that goal. But again, we will see what happens. And I understand clearly that they will not do the same in the US Fed and in the ECB, because again, even if the goal is the same, the situation is not necessarily the same.